you can hear me, welcome to yet another training video. Good day. And on today's section, we look at a different concept. But before we proceed, let's remind ourselves on the previous concepts we had, which were called market structure, where we analyzed different structures in the financial market, ranging from an uptrend, a downtrend, and a consolidation market, or a choppy market. Sorry, I beg your pardon, choppy market. So we have succeeded in summarizing on that concept for market structure. And on today's section, we look at a different concept altogether, a different concept we call time frames and top-down analysis. It's on the board, it's on the screen. Time frames and time frame and what top-down analysis. All right, so we look at these concepts today. God help us with we exhaust it, otherwise it will be rolled over to the next training section. All right, now, as a price action trader, your primary time frame is the 1 hour. Now, you have the 1 hour time frame. In fact, you should have the daily time frame. Okay, the daily time frame should be a time frame you use to validate the demand and the supply levels in the financial market. So you have the daily time frame, you have the hourly time frame, all right? And then you have 45, 30, 15-minute time frames. That is, if you want to be a 5-minute time executor like me, right? So price action works on bigger time frames. If you try to trade, let's take for example pin bars or engulfing bars on just 5 minutes time frame, you will lose your money because there is a lot of noise on smaller time frames. So what you do is you have several time frames displayed. You have, okay, look at this. We have here, this is the 5 minutes. We don't do any analysis on the 5 minutes. We only use the 5 minutes to enter executions or to enter for executions. Now, on this area, we have 15 minutes, which also is some part of our analysis tool for comparison. And then the other area, you have 30-minute candle or 30-minute chart. Here we have what? 45 minutes, right? And then you have your hourly time frame here. I always prefer giving a full screen to the hourly time frame. And then we can have the daily time frame here. All right, so what I do on my chart on daily basis is I have all of these time frames splitted from the daily to the hourly, 45, 30, 15 minutes, down to my execution time frame, which is 5 minutes. But one thing is this, I do not analyze on the 5 minutes. I do my analysis on the higher time frames. Right? So you should do your analysis. If you're analyzing a chart on the 5 minutes, there is every tendency that it's going to give you false signals, or we can call them noise. Besides, there is no successful price action trader who focuses on what? On one time frame alone to analyze. No successful trader does that. You should have different time frames on display, and you should have a role given to each time frame, or as long as your analysis is concerned. Right? So no trader analyzes on one time frame. Maybe you have heard of the term top and down analysis. We'll talk about that, right? But it means to begin with bigger time frame to get to what? To get the bigger picture. And then you switch to the smaller one to decide whether to buy or sell, like I always do. So I have my bigger time frames giving me, of course, which I run all my analysis. My chart is free because I drafted, or I cleared it up for the purpose of this training. Otherwise, you would have met probably a messy chart to you, but to me, it's really quite understandable. But I think before the close of this section, we'll mess our chart a bit as we go over top and down analysis, right? But now we're still talking about time frame, right? Time frame analysis. So let's say, for example, you want to trade the 5-minute time frame. You have to look at the daily time frame. You look at the daily, right? So this is the daily. Basically, I use the daily time frame to set up my supply and resistance level, right? That's what I use the daily time frame more of, setting my supply. And you see, there was already a supply and resistance level set on this chart. I think I traded this chart this morning on the daily time frame. So I use the daily time frame to decide the fate of the market, that is, areas where supply and demand is located. Then what do I do on the 5-minute, on the hourly? I use the hourly time frame to decide the trend of that market. The trend. Remember, we are HFX traders. We're not day traders, right? So the hourly time frame for me is basically for trend, and I can also analyze on it, go on it, and look for continuation patterns, right? Or peaks and valleys around the hourly time frame. But if I don't see, of course, I already have my supply and demand levels mapped out on my daily time frame. Now, top-down analysis helps you what? Helps you get the previous areas, the previous support and resistance levels in the financial market. The most important support and resistance levels, these areas represent turning points in the market. If you can identify them on the weekly chart, you will know what is going to happen when price approaches these levels on your chart. So why we have the top-down analysis. Now, when I mean time frame is a different concept. Top-down analysis is a different concept, right? So we have two concepts here in one. I believe I have explained the time frame analysis era, or what we have the time frame. Time frame is about telling you to have views or eyes on the market from different angles, from different directions, from different perspectives, right? So you don't have just 5-minute candle or 5-minute chart. You are not going to make so much progress because your analysis are just based on one time frame. You're not seeing far. The financial market is a broad market. You should see within the range, you should see everything happening within the hour you are trading on. That is the major reason for time frames, right? Having different time frames splitted on your chart, on your screen. So now let's talk about top-down analysis. Why do we have top-down analysis? Why do we have all of the time frame and top-down analysis? One is to determine the market structure. Like I already mentioned, that I basically use the 1 hour time frame. This is the 1 hour time frame. I basically use the 1 hour time frame to determine to determine the trend of that price or the trend of the market or the structure of the market. So since on my trading psychology, I trade 1 hour on a section. That is, we have 1 hour morning section and 1 hour evening section. And then on each of those sections, I trade 1 hour. Therefore, a 1 hour trend is enough for me. A 1 hour trend, a 1 hour market structure is enough for me. So what I do on the 1 hour time frame, I come to identify the trend or the structure of the market. Is the market on a downtrend on the 1 hour time frame? Is it on an uptrend on the 1 hour time frame? Or is it consolidating or choppy market? I would have to use the hourly chart to verify and confirm that. So the next reason for learning time frame and top-down analysis is to identify previous candles. Now, this is what we will do after, of course, we'll go over this. We'll understand how we can identify previous candles. The last candle on every chart, that is from the hourly, or you can start from the daily, all right, from the day, 30 minutes, 15-minute candles. It's very important because it tells us what happens during the week or during that hour, right? Since we're hourly traders, or since our duration on each section is on an hour, all right, that is it elapsed on an hour. So we just focus on what's happening within that an hour. So getting the hourly candle, the hourly previous candle, getting the 45 previous candle, getting the 30-minute previous candle, and getting the 15-minute previous candle, it's very important. It's very important that you do that. And how do we do that? Now here, I have an hourly candle, an hourly chart. So what I do, you pay attention, this is more practical right now. So we analyze the previous candle in these hourly charts. You should watch out for what I'm doing. It's very important you do. So you analyze the previous candle in that hourly chart. This is hourly chart, and this is the current candle. So this is the previous candle we are going to analyze. To what now? This is just on the normal routine or normal psychology that, of course, eludes man. What we talk about continuity or repetitive or repetitions. Humanity has a kind of a habit that repeats things. For instance, every morning you wake up and brush your teeth, right? Each day you make sure you have your breakfast, your dinner, and your lunch. Each day you make sure you bathe at least twice a day, in the morning, at least in the night. All of these patterns, all of these habits is what you repeat every single day. This is still the same habits people bring to the financial market. So the financial market has a recurring habit of repeating what it has done before. So the ability to know what market has done before gives you an edge over what is going to do on the market presently or when you're on it. So that is the essence for what? For top-down analysis, that charting previous candles, right? So this is a practical way and you should learn how to do it. This is what I do. I pick an horizontal line. You get the week. I broaden this chart. So I am getting what I'm charting. I want you to understand what I'm charting is not the current candle, but what? The previous candle. Now, I pick what? The wick or the shadow or the tail of the previous candle. I place a horizontal line on the previous candle wick and I color it blue, right? I should repeat that same thing and pick the body of that candle also. Now this becomes my support level of the previous candle on the 1 hour time frame. I hope you're getting this. I still repeat the same thing on the roof. I label it, I get the wick of the previous candle above, that's the highest price, and I label it, or I make the color red. This is the wick. I repeat the same thing on the body of the previous candle. Now, I've gotten my what? Resistance level. Now, for this previous candle, I have support below and resistance above for the previous candle. This is why we do this. This is called top-down analysis. Now, what do I do this? I go over to what? 45 minutes. I click on it, and the same thing I did on the 1 hour is the same thing I'm going to be doing on the 45 minutes. Remember, on the 1 hour, we concentrated only on the previous candle. So I will still concentrate on the previous candle on the 45 minutes. So I still repeat what I did. Horizontal line, what? The wick of below price, like the wick of the previous candle below, and I make that one what? Blue. All right? The body also, I label it too. I drop it there. All right? It's very important. So now I have a support and a resistance. Sorry, I have a support, all right? So if you notice clearly that the 1 hour resistance was also a resistance for the previous candle on the 45 minutes. You can see that, right? We're on the 45-minute time frame. So since the 45 minutes, since the hourly time frame is also a resistance on the 45-minute week, we just move ahead to the what? To the body of the candle on the previous candle on the 45-minute time frame, and we make that what? Red. How hard is this? I hope you're getting this. We proceed to what? To 30 minutes. We repeat the same thing. Now look, on the 30 minutes, I think the 45 minutes or the hourly time frame has already taken what? The wick below that candle. So what do? We just proceed to the body of the candle. Make sure you watch this video over and over and over and over again until you master this concept. So now we have the body and the wick of the previous day candle, of the previous 30 minutes candle, I beg your pardon. We proceed. Now, we still have to repeat this same action on the what? On the roof, right? So the wick above it, we identify it and make it what? Red, right? Similar thing goes for the body, but then you see we have the body. Part of the body is already identified, but then we identify the body, of course, on the previous candle. This is how I set the zone. Set, right? So this is for the 30 minutes candle. Remember, what we are identifying is the previous candle, the below wick and the body, candle wick and the body, below and above. The previous candle, the wick and the body, the wick and the body. It's very important you understand this. We proceed. 15-minute time frame. This is what it's called charting top-down analysis. So now for the 15 minutes, you see that the support level has already been taken below. So we just proceed with the body. We map out the body and make it blue. Now, the reason why we don't use similar color is to what? Differentiate between our support on top-down analysis and our resistance on top-down analysis. It is very important you do that. So from the on top of the previous candle, that is the week above, we already have it identified, maybe or probably by the 30-minute or 45-minute candle analysis. So if you also check closely, you will also see that the body of this candle also has already been identified. So we don't have any problem about that. We just put it. So this is what it means to chart your candle or to chart the previous candles. That is on the concept of top-down analysis, combining it with what? Multiple time frames. Now you see, on the 5 minutes we have this, on the 15 minutes we have this, and on the 30 minutes we have this, and on the 35, and on the 45 minutes we also have this. Now, if you will check closely, you'll find that there are areas market rejected on the 5 minutes. You see that price came here and it dropped. Price came here, it dropped. Price came here, it dropped. All right? So all of these zones are important market retesting levels that price has potential possibility of of repeating its previous action on that time frame. So you should know the previous market behavior. So by charting top-down analysis, that's from charting for 1 hour, 45 minutes, 30 minutes, 15 minutes, you have equipped yourself with previous levels that price rejected, that price retested. You can see here, you can see what is happening currently at this level. Currently, this price is dropping. Price went up, hit that zone, and dropped recorded a low around this zone. Okay, so these are proven areas that price has possibilities of coming and retesting. So you arming yourself with knowledge like this, or knowledge with this powerful knowledge as this, gives you edge over the financial market. Now remember this, as a trader, you want to program yourself, you want to position yourself in a situation where you win more than you lose. So you're considering analysis that gives you higher wins than you lose. We're not saying that at a point in your trading experience you're not going to lose, but then you want to win more, right? You want to win more than you lose. So that is on the charting top-down analysis, right? So the market condition is also one of the reasons why you should consider analyzing your market top-down analysis. That is giving the top-down analysis room to thrive. Now, what the market is doing on the hourly time frame, is it trending up or down? Is it ranging or is it choppy? Like I mentioned before, I use the 1 hour time frame to validate the trend of the market, of the financial market. So I use the 1 hour to know if the market is trending, ranging, choppy, right? So it is very important. So what are the most important levels, which we have already pointed out? The most important level by doing our charting, top-down analysis, just charting up and down the previous candles in the financial market. So on the next thing that also is vital for us, why charting top-down analysis or is vital for us to know, is signal. That's price action signals. Price action signals are really important levels, really important tools. A candlestick pattern that will provide you with a signal to buy or short the market. This could be a pin bar or engulfing bar or an inside bar. All right. So all of these levels are what. Remember that we have been doing a lot of things from candlesticks to candlestick signals to support and resistance, trending, that's market structure, and now we have come to what? Time frame and top-down analysis. it is very important that each of these levels or each of these tools are basic confirmations. You do not trade them alone. What you do is you have to verify other verifications, other confirmation tools. Now you want to know if there is a signal in that level before you take it. So this is it on top-down analysis. That is time frame and top-down analysis. Time frame is visually letting you split your views, letting you split your screen, giving you eyes all around the financial market, all around this area, the time frame, the window, the duration you're trading, right? So top-down analysis is giving you an idea of the previous market behavior, thereby positioning you well on the current market activity, or giving you clue of what the price is going to do currently. So that is it on this training section. Make sure you go over this video over and over and over again. This is how mastery comes. Mastery comes by doing things right, repeating things. We're going over them over again. That is how mastery comes. So what we do here is not enough. When you practicing on your chart, going through it is where consistency comes. So I will see you guys yet again on our next training video. Do have a lovely day. Bye for now.